Hey, it's Michael Saul, but everybody calls me Tiny. This video is the NASDAQ takes a lead. Plus, is this the spot to get in? This is stock market analysis for the week of March 18th, 2019. If you would like to receive intra-week updates, go to www.attackthemarkets.com, put in your first name, your best email address, follow the directions, and you will be on the distribution list. Facebook group, facebook.com/groups/attackthemarkets. If you like what you're hearing, give me a thumbs up and leave a comment. It will help me move up the rankings. I would really appreciate it. And to never miss a video when one is uploaded, click subscribe and smash that bell, and you'll be notified whenever I upload a new video. Now, if you didn't do that last week, you missed last week's video. I have very few views on it because I didn't send an email out to my distribution list. I don't know what happened. I thought I scheduled it. It never went out. So I actually got a bunch of emails saying, hey, is there a video this week? So just subscribe to the YouTube channel, or just, if you don't want to subscribe to it, just go to the YouTube channel. By Monday morning, the video should be up there. Usually I try to do it as early in the weekend as possible, but sometimes I just get bogged down with my research and I don't get the video up before Sunday. Okay, great. Now, that's a minute and 20 seconds you're not going to get back on your life. Let's take a look at the market. So, what happened with the S&P last week? We came up, we got the bounce, and we came up to the previous resistance line where we once rejected, and we just kind of stood there for the last 3 days of the week. We didn't go very far. Still a lot of crosswinds here. And in last week's video, and you can watch it because it is on the YouTube channel, I talked about the excuse for the pullback being, oh, the trade war being settled is now baked in, so the market's not going to advance. And I don't believe that's the case. Maybe the market may get overextended, but not baked in yet. I still think we're going to highs, and this is why. The NASDAQ has now taken the lead. That is a good sign. Okay, if you watch the financial news networks, everybody wants to quote the Dow, because it's a good media stock. It's a nice big index, and a couple hundred points here, a couple hundred points there, even though it's really should be based on percentage, right? But anyway, it doesn't matter. The NASDAQ, the Russell, they are the true leading major indexes, and of course the S&P, very important as well, and the mid caps. The Dow is last. That's why I always say I'll look at the Dow, but I really don't care much. But look at the NASDAQ now, out in front, a new highs for 2019, highest level it's been at on a closing basis since October of 2018. That's a good sign. Is it a little extended here? It could be. So I wouldn't be surprised if we got a pause or a pullback here and then it decided to continue to move. But I am looking for higher prices here on the short term. All right, I'd like to see, like I said, maybe after a pause or a pullback, I wouldn't mind seeing that. But then I think we're going to resume our movement up. Now here's the Russell. The Russell is under the 200-day moving average, still above the 50-day moving average. Don't really love this. I would like to see the Russell acting strong, but right now it's coiled up, so let's see if it can release to the upside if we continue up. It may release to the downside if we decide to take a pause in the broad market. Here's the Dow. Again, I don't really care that much. I think you could see more looking at the S&P. Here's the mid caps also at you see how the 20, which is in red, and the 200, which is in white, they are converging, and notice how it's playing some resistance here. So again, I wouldn't be surprised if we pull back. I think that in the end, that's probably the healthier choice, kind of like me eating a St. Joseph's pastry. It's not even St. Joseph's Day, and I'm eating St. Joseph's pastry. Anybody know what St. Joseph's Day is? It's great, man. The pastries are so good. But anyway, that's the unhealthy choice. So the healthier choice is eating an extra apple. But in this case, I think that the healthy choice here would be a pause or a pullback in the majors and let some fresh money come in and then boost us up. I still think there's a chance, though, that we can get to new all-timers before the end of the first quarter. There's a chance, okay? So you're saying there's a chance. That's right. All right, let's take a look at the sectors. Semiconductors, really nice out in front here acting well. Here's NVIDIA. Okay, we were watching this range for a couple weeks. Got out above the top of the range here. Still has some work Wow. Still has some work to do. And there's a gap up here at 195 that needs to get hit. Here's ADI on the move higher. Nice. Here's Intel on the move higher. Nice. Here's KLA Tanker looking to go to new all-time highs as well. Banks, BKX. Still between the 50 and the 200 day, but notice how they're converging. The 50 is the blue, the 200 is white. They're converging, so it's getting ready to squeeze and then move one way or the other. Here's Bank of America. So just kind of sitting here sideways, waiting to see which way it's going to go. I mean, to me, Bank of America, right up here with the gap, and the fact that it didn't fill the gap, I would be watching for it to go higher. But again, gotta wait for the trigger. Okay, it is in a consolidation now. Buying in a consolidation is dangerous. All right, how about Citigroup? Watch the 200-day moving average. And JP Morgan, watch the 200-day moving average. Right, here's Goldman Sachs, all coiled up, ready to go. Which way is it going to go? Let's see if it can release to the upside. Here's the broker-dealer index. So, again, the 200 and the 50 are moving together. Let's look at some of the glamour stocks. We got Amazon headed to the 200-day moving average. See if it can get above there. And then, of course, this high back here in, where are you, on the end of January. See if we can get through that. Here's Apple. We talked about Apple a couple of weeks ago, and it released from its consolidation. Watch the 200-day moving average up there as resistance. Here's Google. So Google popped up. Now it looks like it can be forming a bull flag. See if it resolves out of that bull flag and continues to go higher. Here's Facebook. Some news on Friday. Blah, blah, blah. This, that, the other. I mean, you can read about it if you want, but to me, I just, I think Facebook's going to have these kind of news, it's not really a news release, but going to have news, this kind of news on Facebook for a while, back and forth, right? Privacy, denying privacy, what's going on here, who's leaving, right? I believe Friday it was a couple of key people have left. All right, great. Anyway, you got the hammer. It held the 200 and the 50-day moving average. Let's see if it resumes from here and can continue. Tesla, the Model Y was met with not a great reception. Again, this is so sloppy, not really interested in this. Microsoft, okay, headed up to new highs. It poked the new high, but couldn't close at a new all-time high. Still really nice move here for Microsoft. It's been on a tear. How about another stock in the news, Boeing? So you got the 200-day moving average as potential support, but it may coil up here and then before it makes its next move. Again, not really just getting ready to short it here. I want to see if the volatility dies down, and then I'm looking to react off of that. How about bonds? Yep, bonds sitting here. All right, they had rolled over, then they had gained that back. Now they're just consolidating, waiting for the next move. Oil could make it to that 200-day moving average. This is the USO. Here's gold, a little sloppy here. Here's the miners, right? You can see the miners also sloppy. Let's try to draw a line around them here. You got the you got the consolidation coming in here. So let's see which way it goes. I mean, I would get a bullish lean to it because it's had a nice rally off of the September low here, but gotta wait for confirmation. So, follow up. S&P 500 at resistance that we highlighted a few weeks ago, that came into play a few months ago. All right, so a little dip led to another try here. Wouldn't be surprised if we got another pause or pullback, but I like the way the NASDAQ is leading. So I am still looking for new all-time highs with or without a pause. But again, I think a pause or pullback would be healthier, would give, stair-stepping, grinding motion is always better historically than has been big volatile moves. Okay, big range expansion moves, right? Like something like this. Like look at this bounce here. Like this was a big candle, great, but then look what happened afterwards, right? smaller, 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 smaller. Okay, that's what you want to see. You want to see more of a grind, more of a stair-stepping move in the charts. Okay, so the stock that I mentioned in the title, is this the spot? Yeah, if you didn't figure out, it's Spotify. Okay, I love my little humor. Anyway, so, and I'm glad somebody likes it, except that somebody is me. All right, so Spot is in a coil right here, above the 50-day, below the 200-day moving average. Had a nice push up off the initial offering, came up here, a nice gain, and then it just rolled over, went to new all-time lows. Now it's, went to new lows. Now it's back basically around where it came out, a little bit lower. Let's see. Yeah, I mean, not the first day, right? It opened here, but it closed there on the first day. So, yeah, it's a little bit shy of that. But more importantly to me, the 200 and the 50 are pushing together. So we want to see which way that resolves from here. But I don't know if this is the spot right now to buy it. But if it were to break out here, you would have the 200-day moving average, which would give it about a 9-point gain until it ran into potential resistance from that moving average. So it could be good for a trade. Questions? I got answers for you. Tiny@attackthemarkets.com. Give me a like and leave a comment if you like what you hear on this video. Press the subscribe button and smash the bell if you want to be notified when the next video is uploaded. Have a great trading week. I'll talk to you in the intra-week updates or in next week's video.